Welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 8th, election day here in the United States. Welcome to everyone in the room. Adam, Eileen, Conwall, Mark, Pete, Graham, great to see everyone here today. So I'm going to keep it relatively brief here today, guys. I'm going to go over all the dollar crosses. We'll go over some of the other crosses we've been following. If you want to kind of take a step away from the major event risk, obviously that's here in the United States. Euro CAD is still on the table. Aussie Kiwi still on the table. Aussie Yen looks like it's made a breakout. I wouldn't go touching it just now, but I will go over those levels with you as well. Obviously, dollar, yen, Kiwi dollar, euro dollar, sterling dollar, all the dollar crosses are in play today. Look, if you're a little hesitant to get involved, I don't blame you. Today and tomorrow, heading into tomorrow, is a good time to kind of sit on your hands if you're not an experienced intraday trader. These conditions can be very, very difficult, and certainly throughout the course of the night, as we get the vote counts from the various districts and states, you're going to see market sort of whipsaw back and forth. So all bets are off heading into tonight. I will probably be flat as a disclaimer. I'm holding a small position in dollar yen still, but we'll go over that later on in the session. But that being said, I'm going to go over the crosses, like I said, and I kind of just want to leave the room open for questions, guys. Your questions, whether it's strategy, positioning, any pairs or specific assets you want to look at today, please feel free to post them on the message board. We'll keep it kind of brief here, as I don't really want to encourage too much excessive trading in this environment. Okay, that being said, polls as it looks like right now, it still looks like Clinton has the lead. We'll have to see how this pans out. Obviously, there's still a lot of talk about there being some sort of silent majority, a Brexit theme type of play, if you will. That being said, the dollar is still holding at near-term resistance, and that's a level that we talked about yesterday, confluence resistance, both on the DXY and also on the dollar index. As it stands right now, heading into the U.S. session, here's what the relative performance of the dollar looks like. You can see it's strong against all its major counterparts, save the loonie, which is up 0.02%. Dollar CAD, as you guys know, on the swing trades, still looking pretty good. I'm actually still also considering a Euro CAD, which is also coming into support. We highlighted that in yesterday's piece. So if CAD strength does materialize, it might be a decent play. Are you short in dollar yen? Conwall, so yeah, personally, I'm actually holding a small short scalp right here. I got out of, let me take it back. I actually was in a short yesterday as well, took 10 pips off it, got stopped out at 20 on the way up, and then here we are at the monthly open again, so I think it's worth another shot, but we're super light on the leverage, and again, we want to make sure that we're really nimble in this environment. Eileen says, has IDO done any speculations on election winner? No, Eileen, IDO doesn't do that kind of thing. They're really focused on price action. That's their only thing, right? They study price patterns, and the software is very, very a well-developed piece of art, let me tell you. But it doesn't really take into account speculative type of sentiment gauges like election winners or anything like that. Conwell says, me too, stop at 104.91. Yeah, if dollar yen makes a break of the highs, I do have resistance just up there. So we'll take a look at that in a moment, Conwell. So looking at the dollar again, strong against most major counterparts, but at resistance. Here's what the Dow Jones FXCM dollar index looks like. On the daily chart, you'll note that swing high that we made right there. Really nice pivot in price over the last couple of months and years. That coincides dead on with that parallel. Continuing to cap resistance as we noted yesterday. That's the high comes in right at 97.82. Okay, so that's just basically capping the top side advance here. If you look at it on a 30-minute or on an hourly, okay, those trend lines and median lines we drew last week still continue to give us good guidance. The lower parallel caught the lows here last week. The upper parallel is just higher. So I think you can get another pounce higher here in the dollar index, but monthly, weekly opens from last week, all at the 618, 98, 27, basically into 98, 38, 10 pip range there. I'm sorry, this is the, confusion guys, this is the ICE dollar index, the Dow Jones FXCM dollar index, the opposite one. Here's the Dow, a little different, but knocking on the door at the 2016 open as resistance. Okay, same type of setup. You could see in a scenario where you get the elections come out, this thing stretches into a high below the monthly open, still looking at risk for another pullback lower in the dollar index. So both indices look about the same. Testing near-term resistance, there's room for a stretch higher, but basically the monthly open should cap the advance on both of these dollar indices if last month's high was in fact a more significant technical high. All right. Any questions on either of the indices? Just looking for a rebound here. Maybe travel a little higher, but the risk remains lower. All right, so let's jump into the juicy stuff. Here's the setups that we'll be following heading into the election. We'll start off with the sterling, which is something I highlighted yesterday. Very clean. Jamie is right on this as well. He's got the same exact structure, so we're looking at the same exact thing here. I haven't put out a daily chart on the sterling in a while. I just wanted to throw this out to kind of give you guys reference on where we are. As I noted in the report, I'm not really a big fan of the cable just yet, but it's during these times when you have big market event risk. You have obviously volume is going to dwindle down. This is the best time to kind of map out your levels and have a game plan so that you know what the critical levels are once the market finally does get on the go. So looking at the sterling, here's what it looks like on the daily chart. Basic channel descending off the highs that we made from September. If you take just that channel or basic trendline resistance, you can see that that caught the highs here and you're getting a near-term pullback. Basic trendline support off of the yearly low converges on the monthly open right here at 122.30 or so. Okay, 122.33. Key support, critical support on the broader picture here for sterling. And if we break below that, again, you'd look for a continuation right back into that median line. So you know kind of the game plan. Ideally, an ideal scenario, my base case scenario is that you see a little bit more of a drop here in the sterling, but you look to buy that drop for inevitable breakout targeting 27.98, basically the 28 handle. But the risk certainly is for a little bit more of a drawback here in the pound. On the intraday chart, here's what it looks like now. Here's what it looked like last night. Okay, nice median line structure off the lows, continuing to hold very well. You saw last week we probed right through the upper parallel, came right back, and then we opened this week with a drop right into that confluence support structure. So as I was noting yesterday, the risk remains lower near term, sub 24.69, which is a basic 50% of that drop. In fact, if I drop that to the new low, it's going to shave off a couple of pips, 24.66. And basically you're looking for some targets down here, 23.55 and 23.20, both areas of interest for me for possible exhaustion on the down play here, possible rebound play higher. Again, broader bullish invalidation down here. Monthly open, trendline support or the lower parallel, and this is what would put me back on the south side, broadly speaking here for the pound. That being said, looking for support at these structures for possible long entries, targeting this level here at 25.60, which is basically the high from last week, and up here at 126. So a game plan for British pound, if we do get a surge of dollar strength into the elections, look for some support down at those targets. And again, looking for some waning momentum, long triggers to kind of give us a vault or a base to rally off of here in pound. As far as the sterling is concerned from event risk outside of the elections, you really don't have anything for the remainder of the week. You do get trade balance figures on the 9th, but that's not likely to be anything big tomorrow morning. Obviously, the election results will be trickling in overnight, so mostly the markets will be reacting to that as opposed to the UK trade balance figures. Next big print for the UK is on the 15th, and that's going to be consumer price index inflation numbers. Questions on sterling? Real nice here. Okay, so that was number 3. Kiwi Dollar, number 4. Here is what Kiwi looked like last night. I kind of just wanted to highlight this key range. It's still continuing to hold. Okay, on the daily chart first, here's what Kiwi Dollar looks like. So the main thing or the main feature that you want to kind of keep an eye on heading into the elections is 73.80 in my humble opinion. That's kind of the big region right here. It's a long-dated 764 retracement. This is from the decline off the highs that you made in 2015, specifically in April there, but that's not the big deal. The big deal is really the sliding parallel here of that slope. 1, 2, 3, 4, couple of tags here should offer some resistance. The highs back from August should offer some resistance. Again, that 764 should offer some resistance. And add to that, basic channel support. If you take this channel right here in gray, channel resistance. So anyway you slice it, 2380 is kind of the top side level for me on Kiwi. If we get a strike into that, I want to see a reaction. If it plows through, don't touch it. It's likely to run right back into 7450, 7480. But if you get some sort of reaction off this level, this is a region I think you can get a little bit more of a sharper pullback in the Kiwi. Here's what it looks like on the intraday charts. Okay, and here's what it looked like. Here's the hourly, and here's what it looked like last night. Okay, first on the 240 minute, just to show you the structure. You have two structures in play here. There's your channel support. There's your channel resistance. Okay, and of the ascending median line structure, which caught the highs last week, that median line now converges on that same 7380 level, 7388. So on a topside breach, that's sort of the region of which I'd be very mindful of to watch for some more meaningful resistance for Kiwi. Near-term support, 73.95 into 73.92, the same region we've been watching for months. That is the July high day close and the March 2015 low day close. Really nice pivot in price, right, over the last few months at this point. So that's near-term support, bullish invalidation, 72.60. So as long as we stay above 72.60, you know, the broader picture does look still constructive here for Kiwi Dollar. Questions on Kiwi Dollar. Obviously, for the Kiwi specifically, guys, you have Aussie Kiwi, which is also a play if you want to diversify away from the US dollar. We'll look at that in a moment. But also, I do want to bring your attention to the fact that we have the RBNZ, Reserve Bank of New Zealand, interest rate decision on tap Wednesday night, tomorrow night here in New York. So depending on how the election goes, obviously, in the dollar reaction, you know, before you get all excited on any more longer-term approach positions for the Kiwi, do keep in mind that we have that central bank rate decision on tap the following day. Markets are widely expecting the RBNZ to cut interest rates by 25 basis points. That would bring it from 2% down to 1.75%, and certainly that is a low, a record low for the RBNZ in interest rates. So just to put things in perspective, again, the cash rate comes in tomorrow night, right after the close of U.S. trade, 1.75. We take a look at what the interest rate expectations are for New Zealand. The overnight interest rate swaps are currently factoring in 78% chance, okay, basically an 80% chance almost that we'll see them cut interest rates by 25 basis points. All right, so it's going to be very interesting to see what the accompanying commentary is with the New Zealand rate decision. That's really what's going to drive prices, specifically because the markets are already expecting this cut. So it's why I do see a scenario where you could see Kiwi kind of rally on this because everyone's expecting the cut, and then the commentary comes out a little bit more dovish. Might be the opportunity at that point to fade it off that key resistance level. So I'm looking forward. I do think you get a lot of play in the Kiwi, you know, post-election into RBNZ. Any questions on New Zealand? Hey, Conwall. Yes, we will get to crude, my friend. Just a moment. That's number 4. Let me just take a quick segue here while we're at it and talk about Aussie Kiwi, since we're in the Kiwi cross. Here's what Aussie Kiwi looks like. You know, I highlighted this setup earlier in the week. Okay, here's what Aussie Kiwi looked like early in the week. And we're basically just wanted to really bring to your attention this major key support at 104.30, okay, into 104.50. Big support region. Now, we gapped just above it. And as I noted here on Sunday, I was looking for the rally to break through those highs, basically that median line, to get us continuation to 105.68. Possibly a stretch into 106 would be a nice play in Kiwi, in Aussie Key. There's that key support. I mean, big critical region. A 618 retracement from the advance off the September lows. You have former median line support, resistance, now support again, the lower parallels, the swing highs from the opening range of September, all lined up right here. So the rally failed at interim resistance, the January lows. Okay, here's your yearly open. So the range of focus for Aussie Kiwi moving forward is going to be 104.38 into 105.38. This 100 pip range is absolutely paramount. If you get the topside break, well, then you're looking for that recovery down towards 106, like we said. If you get the downside break, there's really, like I said yesterday, there's not much. You might get a soft target at 104.10, but you're basically looking for a risk of a drop down into the 103 handle. So big area of support near term for Aussie Kiwi. Momentum is at 40. Watch with our attention basically against this region to start off the week. Conwell says, sir, this chart is Kiwi Dollar. No, this is Aussie Kiwi. Conwell, some confusion? Did you need the Kiwi Dollar chart again? Here's Kiwi on the daily chart. Okay, so you can again see a scenario. This kind of stretches a little bit higher, pushes Aussie Kiwi for another kind of stab lower. But broadly speaking, on the pullback here, if we do get that pullback materializing in Kiwi, that would be a really nice play, in my opinion, for a nice rebound off this support in Aussie Kiwi. Yes, Steven. He says if you saw that topside break in Aussie Kiwi, if it breaks, you're looking at 106.63. So 106.63 is the yearly open. That's the broader play, okay? From a scalping or an intraday standpoint, my initial targets would be right here, though. Would be the upper parallel. Steven, does that make sense? This would be the first region. Like if we did get a stab lower and we got an opportunity to get long, or there was a trigger that put us long, I take a little bit off here. This is where the bulk of my exit would be, stops at break even. If we get the stretch beyond that, you have the monthly open at 106.38 and then the 2016 open absolutely at 106.63 is a major target. But the first sort of barrier would be the upper parallel here for this current formation, and that coincides at 106. Does that make sense? He says, got it. Right on. Right on. He says, and a support break and a support with a break to the low would be 103.20. Yes. If I see support break down to the downside here, I mean, watch these parallels, guys. I give you the major key targets I'm looking at. Watch these parallels, which could offer, near-term bounces. But yeah, on the daily chart, you really don't have anything major structural support until down in that 103.20 into the 103 handle. Okay, 103.12. Steve, is the actual stretch low that you made back here in July. So this region here, if this breaks. Really critical for Aussie Key. And remember, this is all based, guys, on that key slope of influence that we identified back in the start of 2014. There's your January 2014 low. All of this that we've been following for the last 2 years has all been predicated on this slope. And that's the same slope that basically comes into play just below where we are right now. So the last time we broke that, you saw a big spill, right? Now you have the 50 line here, which coincides there with that slope. I mean, it's just a big region. Big region. So a play that we might want to consider, okay, if we're looking away from dollar exposure here and we don't want to kind of get caught up with all the election hoopla overnight. Aussie Kiwi, that was number 5. Again, another one to watch heading into the RBNZ in Wednesday. Might be a nice play here on Aussie Key. Euro Aussie, Mark? Gotcha. Let me write that down. Okay, that was number 5. Let me just jump back first to Euro Dollar. That'll be number 6 for the day. Here's Euro Dollar, currently trading at 110.44. Look, for the Euro, I think the levels are still pretty clear. I do like a little bit more of a reset lower to get back on the long side. You saw where we turned from, obviously on Friday, big region. You had the 100-day moving average, slope support, now resistance. Obviously, the lower parallel here, which now looks like it got rejected again. Yesterday's high was exactly at that parallel. So I'm starting to think like this thing needs to make another low, guys, before we start to rally in euro dollar again. That's just my humble opinion. Here's what it looks like on the 30-minute, or I keep saying 30-minute. Here's the hourly, and here's what we looked like yesterday. Euro dollar. Okay, so near-term resistance at 110.66. You got another tag of that in overnight trade. There was the rally, pulled off. I still think you probably see another run into basic trendline support off the lows here for October. You have that swing high, the monthly open, that gives you like 109.80 into 109.90. Still think this is sort of a region to keep an eye out heading into elections tonight. And 111.70 being key resistance. That hasn't changed for the last couple of weeks. That's the 618 retracement from the highs that we made back in August, but also basic trendline or slope resistance right here. We didn't quite get into it. So levels to keep in mind. Again, euro is not necessarily one I'll be looking to get aggressive on if we do get some volatility on the election. But if we see massive dollar sell-off, euro rip higher, this is an area I'd be starting to look for some more stringent resistance. On the way down, if we get a dip into 109.80 into the monthly open, this is an area I'd start to look for some more meaningful support. From here, guys, it's elections, guys. Don't do anything stupid heading into the release. But the levels are pretty clear. Just depends on what the initial knee-jerk reaction is to the markets as we start to get the election results underway. Oh, no worries, Conwell. He says, sir, sorry to do my improper network connection. The chart's loaded late. No worries, man. Any questions on euro dollar? Tentatively looking lower for in a position to get on the long side, trying to stretch into 111.70. 109.90, 109.80 being an area of interest. And in fact, if we take a sliding parallel here, well, no, I don't want to stress that yet. Also note that former channel resistance for these parallels that we were following for over a month also coincide in that same region. So look for a possible stab lower in euro. All right, that was number 6. Euro CAD, number 7. Another one I just wanted to kind of point out last night that is coming into some near-term support. Obviously on the back of the CAD strength that we were just talking about, another pair that'll be of great interest to me, especially if euro spills lower, guys, and we see a move sub 146.95 specifically in the euro CAD. That might be a little bit more of a breakdown scenario there for that pair. Here's what euro CAD looks like first on the daily chart. No change there, so I didn't include it last night from the previous update, but you're basically looking at that reversal off that key resistance region that we talked about, 148.92 into 148.19. Now, if you go to the update previous, back on the 30th for euro CAD, that was sort of the focus that we were looking at on this stretch higher. Okay, this same median line structure is in play. You came right into that key confluence resistance, and you're pulling off into channel support now, or median line support. Here's what it looked like last night. Here's what it looks like now. Again, for the daily chart, the significance of that region, the upper median line parallel for this multi-year formation. This is from the high that you made back in 2015 in August, the low that you made in December, the high in January. Really nice touches. There's the upper parallel alongside a 38.2 retracement and a 100% extension from the decline off the ascent off those lows. Big, big region. Really nice reaction, right? Here's the intraday. So within the confines of that rally, now you're sitting at the weekly open. Just lower, you have the monthly open, which comes alongside parallel support, and again, a basic 38.2. 146.95, that's my sort of confirmation. If you break below that, that's what I would be using as validation that we put in a more significant reversal here for EuroCAD. That being said, look for some near-term support at 47.22 into 47. If this thing is going to vault higher, that's what needs to hold. And this is why I'm watching crude prices so closely, and why I'm also watching the CAD very closely, because if you see the CAD rally, this would be a nice opportunity, in my humble opinion, to catch a little bit more of a downfall play. Questions on EuroCAD coming into some near-term support here. All right, that is number 7. Let me do Euro Oz for you. Who was that for? Hey, Mark, here's Euro Oz, man, number 8. I haven't looked at it today. Give me a second. Let's see where this thing is. Okay, so here's the daily chart. The highlighted feature of the technical setup in Euro Oz, obviously, I know everyone here is aware of this, was the major trendline break that we saw late last month. We talked about this. Multi-year trendline support, break to the downside. The reversal off that region was textbook alongside of median line for the current operative structure. Here's the drawdown. I still think you're at risk sub whatever level this is, 43.50. It's the lows from December of last year. The median line from the decline here. Near-term resistance. See what the intraday chart says. Ah, there's 43.50 again. All right, so we're basically testing that resistance right now. I do like where it bounced off support. A little support range there you got to keep in mind. Again, my favorite confluences, guys. 1618 extension from the decline off the high, a 618 retracement from the ascent off the low. That's the kind of reaction you want to see. Let's zoom this out to a 4-hour chart. Okay, a little bit of a complicated, not complicated, a little bit of a messy chart just because I have this embedded piece here, guys, but I think it's worth leaving on for now. Highlights some interesting levels. Again, that 100, yeah, I don't want to stress that. Okay, 6786 comes in at the same exact spot anyway, 4220. Okay, so this is what I would say on Euro Oz. I think you have the risk for a rally higher. Near term, I do like the broader downside picture on this, Mark, just on account of, again, that break of that multi-year trendline support, and then the reaction off resistance last week was just like textbook. So yeah, I'd have to say that the risk from here is maybe another base, then rip higher into the resistance before you actually make a new low. That kind of would also gauge well with what I'm looking at with broader Aussie price action in and of itself. But what I can tell you is, yeah, I mean, a rally, let me take that back. A rally into the year, monthly open would be sort of textbook, interesting level for me, 44.30. That's your monthly open right here in purple. It's also a swing high that you made back a few weeks ago here on the 20th of October. I think that would be a nice level to start looking for some short entries, inevitably looking for a drop into like 42.20 in the lower parallels. Now, ultimately, let me take one step back on that, Mark. Again, I'm just looking at this for the first time this week, so bear with me. This is what I would also say. Within the confines of this advance, it does look like you possibly made a 5-wave rally. This is a 1, 2, 3-wave correction. Kind of give you the broader focus to the upside near term. So within the consolidation, wouldn't necessarily be looking for a new low here. More so a new low from where we are in price action, not a new low for the year. So again, 42.20 would be a really nice area for me I'd start to look at. Hey, D, great to see you in the room. No worries. As always, this will be archived for you. Mark, does that make sense? I wish I had more conviction for you on this one, but I have to say I do like Aussie pulling back. I guess let's jump into Aussie real quick. So that was Euro Oz number 8. Let's do Aussie Dollar number 9. He says that's helpful. Thanks. Yeah, you're more than welcome, Mark. It's an interesting setup. My comfort level is not 100% yet. My gut instinct says this thing needs to rip, make one more low, then try to make a run towards that key confluence region again at the upper parallel. Let me just see if this did anything. Well, could be all she wrote. But either way, see where that comes in? Same region again. But taking a quick segue to Aussie Dollar to kind of get a picture of what the Aussie's doing. Here's what Aussie's doing. And again, I like the broader topside picture for Aussie. I'm very mindful of where we are. I'll bring your attention to the daily chart and the fact, I was talking with Jamie about this, for the last 4 months, and I think I wrote this earlier in the week, every time we've approached the 77 and 77.56 barrier, you've been greeted with mean reversion type of reaction. Here's 4 or 5 times that we did it back in August rather, excuse me. Twice in October, that 50 pip region has charged a mean pullback. Once last month, or twice last month for that matter. And here we are again. So look, resistance is made to be broken. I do inevitably like the topside break. You'd be looking at 78.35, the yearly high, as well as the upper parallels, which could take you as high as 79. But until we do, momentum is still capped. Price action's capped by resistance, and I'm very cautious. So you know the threshold of what you need to get through, and that's 77.56, bottom line. I extend that resistance barrier into 77.35, 77.56 is 20 pip barrier right here. So knowing where the key levels are for Aussie, that's the level we need to get through to get any meaningful topside rally. Near-term support, well, you have this sliding parallel here around 76.20, but really it's the monthly open that should be the more meaningful key support structure near-term for Aussie. Here's what it looks like on the intraday charts. All right, there's your monthly open. It also is the 618 retracement from the advance off the lows that you made in late October. You know, and that's my near-term bullish invalidation level. As long as we stay above this, I'm looking for a pullback to buy an Aussie dollar. So for Euro Oz, you could see a pullback in Oz, give Euro Oz one last stretch, you know what I mean, before it actually starts to make the turn. That's kind of where my thought process is on these Aussie crosses right now. But for Aussie, you basically just came into resistance yesterday, exactly at trendline resistance extending off that high. Look at that. Touch, touch, touch. That is this trend line, by the way. All right, so you know the levels to get through here if this thing is going to rip. Otherwise, I would still say you're at risk. Immediate risk is still for a pullback sub 77.56. That's the level to beat. Questions on Aussie dollar? So we've gone over Aussie dollar, Aussie Kiwi, Euro Aussie. Let's just touch base on Aussie Yen. That'll be number 10 for today. Aussie Yen is showing breakout. You don't want to stand in front of this train. I know we talked about this here yesterday, Conwell. I think it was me and you in the webinar that were kind of dilly-dallying with a possible opportunity to try to get short while we were heading into 80.36 there. And I know I was thinking about you yesterday when it rallied into 80.63. I know that was the level you were looking at for possibly taking a short. You actually did have an opportunity just to grab a 30 pip drop off that level. But at the end of the day, like I said, the fact that we broke 80.36 did actually materialize, and I think this is marking near-term breakout at this point. The fact that an overnight trade, we came back, tested that as support and rebound off it, really puts the emphasis again still on 80.36, 80.32. Top side, 80.88. It's going to be a basic 88.6 retracement, but really that 2014 trendline resistance. Here's what it looks like on the daily chart. Okay, just higher. Basically into 81. And then you have 81.50, which is the actual stretch highs from back here in July. So some interesting levels here for Aussie Yen rather, and I do think that you made basically a topside break above that key region. The focus now shifts near-term bullish invalidation right back to the 200-day moving average, which converges on former upper median line parallel, which converges on the weekly open, which converges on those swing highs that we made back in late October, in early October rather, mid-October. So this is your bullish invalidation at this point. Okay. Now, for argument's sake, we could get rid of this pitchfork formation. I was just keeping it there, just kind of give you an idea of the breakout type of scenario. So we'll get rid of that to clean the chart up a little bit. Levels remain unchanged here for Aussie Yen. All right, that is Aussie Yen. Moving right along. I'm going to touch base real quick on dollar yen. That'll be number 11. Henry, can you look at dollar CAD? If Hillary wins as expected, could we see the CAD gain? Yeah, sure. We'll take a look at dollar CAD. Absolutely. Let me just get through dollar yen real quick, Henry. So for the dollar yen setup, a little bit frustrating for me. Again, it's election trading, so I don't really even, the positions I've been taking have been pretty small, but still. You guys know I was in a position earlier yesterday. I sat in that position all day long on the short side here after we gapped higher into resistance at the open. I sat in it, almost got stopped out a couple of times. On the pullback and overnight trade, I booked like half the trade at 10 pips, put the stop out at 20, and it got stopped out at 20. I'm now back into it on this tag earlier today, back at the monthly open. I think you can still get a pullback. It's kind of pushing higher right now. Again, guys, this is kind of trying to pinpoint a high and just trying to mess with intraday trades. So I don't recommend you guys get involved here, but an area of interest, again, if we stretch higher into 105.26, basically for the downside to really give way, you need to clear the weekly open. And the weekly open now, right here, converges on the lower parallel, on the median line right here of this formation. So if this is going to break, that's kind of the release zone you want to see that opens up the spigot to some downside targets here in dollar CAD. And remember some of the, analogs that Jamie has been highlighting on the swing charts and the swing posts, guys, for dollar yen over the next couple of weeks does show us the possibility of a more significant dollar yen drop-off before this thing starts to rally higher. So we'll see. I still want to see a pullback. Again, near-term targets on the pullback if we do get it. 104.40s will I'll take off the majority of that position. The weekly open is where we'll kind of wrap up if we get it before the election. Just like me, again, in love with the abomination, Conwall. I feel dirty, Conwall. I don't feel clean when I trade this thing. Not that there's anything wrong with the dollar yen. It's just over my years, not been my best performer. I could probably say with quite certainty that Aussie dollar has been the pair I've traded most in my entire life over the years. Dollar yen has not been the kindest to me, but when the level is there, when you get the trigger, I mean, here's what it looks like, guys. I got nothing to hide. Here's the entry we took yesterday. Again, on that dip and overnight, cleared out half the position there at 10. I left the stop against the highs, and it got triggered. Okay, as we came into the U.S. trade session again here, well, lo and behold, it's right back at the monthly open. There's those purple dots, the 100% extension, just higher at 104.86, and you got some weak divergence, but into the trigger break. So yeah, it's worth a shot. If you get the drawdown, like I said, near-term targets. The stop is pretty tight. If it plows through, it plows through. You probably see a run up into that upper parallel near 105.30 or so. But we shall see. Don't take any aggressive stances. Don't try to play hero ahead of the elections. Not recommended. Mark, I got your Euro Aussie. Who is next? Henry, dollar CAD, right. Here's what dollar CAD looks like, Henry. So each and every subsequent rebound ever since the gap, I do like where it's been topping out. Here's your monthly open with those purple dots, which came right alongside basically the 50 line, or this is the 618 of the pitchfork range. So you can see, literally caught the highs for the week. The weekly open, or the monthly open, now comes in right along that, 134.05, long line, along with that median line. Keeps the focus to the downside. What you need to clear to get the break hasn't changed. 33.31, 33.32. Okay? Oops. Did not mean to do that. Let me just fix this real quick. Okay, so, I mean, I could just drop this line here for you, but I don't really need it. It's basically the weekly open, okay? Your weekly open, those gray dots, which come alongside the median line off the highs, which come alongside this median line for the broader structure. Here's the daily chart. I'll just show it to you. That's this median line. Same structure we've been following. So they all line up at the weekly open. Okay, so 33.33, 33.32, that's really what you need to get down below to get this thing going. I would just be looking for soft targets at 33, but really if we get that downside break, yeah, you're looking for like 32, 35 and more significant support into 131.80, 132. I like it, Henry. The only thing is again, just being completely open and honest with you, I got stopped out a couple of times in the last 2 weeks trying to call this high. So it's actually probably beneficial that it turns over now. Typically, that's the way it works. As soon as you give up on the trade, it starts to work. But I do generally like it. Yeah, Henry knows what I'm talking about. I do generally like it. Below the monthly open, I'm down to try to short this thing for sure. And a break below that 33.30 target, I think, opens up the spigot for a little bit more of a meaningful decline. Henry, hope that helps, man. Does that make sense? Jamie's got a grasp on this one too. He's looking at the same thing. So hopefully that caps out that advance. And again, even if the dollar rips today on an intraday spike for the elections, don't get too excited if it plows through this. Watch that upper parallel. I could see a scenario where this thing just fakes everyone out, rips, and then kind of plummets again. So below the monthly open, broader focus, 34 handle, I am looking for a move lower. Henry says yes. All right, Henry. Cheers to that. Okay, and that is dollar CAD. I see a question here for D. Have you done Kiwi? Yeah, D, we went over Kiwi at length, actually. Let me know if you have any other specific questions. My basic premise is, again, broader risk remains for a rally towards 73.80 and a possible pullback off that region. The daily chart and intraday charts are loaded up with some major levels up there. So just a quick recap, D. That's kind of what my mindset is for Kiwi moving forward. Sir, I did not cover crude. Oh, my God, Conwell, what am I thinking? Here it is, my man. I'm sorry about that. Here's what crude looks like. So we vaulted off this 200-day moving average, and let me take a step back. Kamal, what are you looking to do with crude here? Because here's what I have on the intraday chart. You basically completed a 618. Your weekly opening range is taking shape just above, basically, or just between this key range. I don't know what to do with this here. I wouldn't want to tell you to get short. What I would tell you, if it rallies towards 46.23, the monthly open, I would be looking for fresh short opportunity. Really nice catch with that 50 line almost last week. There's your sort of big resistance zone there. Monthly open, former parallel support, all resistance. So I'd say this is your near-term bearish invalidation level. I'd be looking to sell rallies while below the median line, basically. This is a 4-hour chart, by the way, Conwell. And divergence that we talked about yesterday did materialize into a nice bounce here. Yeah, I wouldn't get faked out. I still think you could probably see another rebound, test higher, but broader picture remains bearish below 47, 47.30 specifically. And you're looking for a stretch into this parallel, which right now comes in around 43.38, 43.40. But more importantly, 764 would take you as low as like 42.18 or so. I just think this is a little exhausted here. You know what I mean? Conwall, I'm not really a fan of jumping into fresh short exposure from here. Even on an intraday position, heading into some dollar event risk and dollar price movement is obviously going to affect these com blocks. So take these levels for a grain of salt right now. Wait for the dust to settle. Again, gunshot approach to the head, I would say this thing would probably rip higher and then start to turn over a little bit more abruptly. All right. As far as silver is concerned, here's what the silver chart looks like. No change to yesterday's level as well. Key support now raised to 1782, former resistance. The monthly open is there. The parallel is there. Basic channel support is there. Major key support near term. Okay. No change on the silver levels. That's still kind of the level to beat as far as any type of reversal play in silver. More so, I'd be looking for support or entries here on a drawdown. I do think that you get a rip higher here in silver. So again, if you need to take this screenshot, Conwall, let me just open that up for you. Those are the key levels for silver. Feel free to take that. And again, anyone here new to the room, I see a couple of new names, guys. Always remember, there's a camera button in the top right-hand corner if you want to take a freeze frame or a snapshot of any of the charts you see presented. If you need to review them later in the session, feel free to do so. Okay, sir, with two counterplaying your levels. Cheers, sir. On Conwall, well done, mate. Stay nimble, okay? You've done really well. I just want you to be nimble here as we get into the event risk. There's going to be a lot of back and forth, and I just don't want anyone to get too caught here as we get into this death trap tonight. All right, so that pretty much wraps up everything from my end, guys. If you have any other specific questions or pairs, I'm going to leave the room open for a couple more minutes. Do feel free to throw it out. A couple of housekeeping notes. Jamie's midweek strategy webinar is going to get pushed back to Wednesday at noon. We're going to let the dust settle after the elections a little bit, clear out some of those daily charts, so he's got a little bit more of a fresh perspective for you guys. So we're going to push out the midweek strategy webinar till noon here in New York on Thursday afternoon. Obviously, the intraday strategy webinar is tomorrow morning. We'll give you a quick update and take a look at the aftermath of the election. We'll reassess where everything is. We'll give you some fresh outlooks there. There won't be an update tonight, guys, as far as the intraday charts. I'm not even going to try to, encourage you guys to take any new intraday positions as we get into these levels. We went over the levels today. This is the kind of time where you need to know what your limitations are. So I'm not going to put an update out today. Obviously, as I'm writing that update, the numbers will be coming out. So I'll try to keep you updated on SB Squawk, and we will revisit everything tomorrow morning and hopefully get this whole election thing behind us. I'm kind of sick of the whole problem. So of the whole issue and the whole process. We kind of want to just get this under the table and move on with the markets. So Conwell says, okay, no big positions. Thank you, sir. Yeah, Eileen says, okay, appreciate your help. Yes, ready for the process to move on, right? I think everyone's on the same breath as far as that. If you are in the U.S., again, encourage everyone to get out and vote today. Other than that, guys, if there are no other questions, I'll go ahead and wrap things up. Best of luck trading, and I wish you all a happy election day. See you tomorrow morning, 8:30 Eastern for another intraday webinar, guys. Cheers.